Okay, so 2026 markets in play plus new option strategies for capturing profits. There is something some of my coaching clients have been asking for as we've been trading for a couple of years now, and they're seeing what works the best of everything we do as far as options go, and they want more of that type of trading for those specific instruments. So today's new strategies will focus on a very specific subset of what we do because people are finding out that is actually the most profitable things we trade, and that's what they want more of. And so that's what we're going to be showing, that particular subset of what we trade, and getting more trades, more profitability, more cash flow from the new strategy because that is what people really have been doing the best with, and they wanted more of it. So it's not a totally new strategy, but we'll talk about that as we get to it. It's just sort of adapted to the options. All right, I'm going to scroll down here. All right. This presentation is for educational purposes only. I'm not giving any specific trading advice. Becky is the co-host. She's also my trading partner. Anything you see in a spreadsheet in a little rectangular box in the handouts, that was all prepared by Becky. She is a data manager. She manages all the numbers, all the stats. We live and die by the numbers. So everything we do has to have a win-loss stat attached to it. That's how we know what to trade, when to trade, because the numbers make sense. If you check the chat window, I have the link for the handouts, so you can go there, and also our video library on YouTube for past meetups. Okay, so let's go down a little bit further now. These are all of the ETFs we trade. Gives us a very, very diversified portfolio of things to trade. Because some people like to trade metals, some people like to trade indices, some people like to trade oil and energy. So there's something here for everyone, all different prices also. Some of the ETFs can be, some of the options might run 2,000 up to $2,000 for one call or put contract, while others are a couple $100. So there's something for everyone and every size account. That's why we have such a diversified list. There are many, 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 many ETFs, but most of them don't have enough option volume and open interest to make them tradable with options. These have enough option, open interest, and volume to make them tradable with options. And we just buy calls and puts. We don't do spreads. Way back when we did spreads, but for pure directional trading, spread is not the way to go. It's just buying calls and puts. This is every setup we trade, we expect a big directional move. So since we're expecting a big directional move, just buying calls and puts works the absolute best for this type of trading. I used to be a spread trader, but as time went on, it didn't match my mindset. I want nothing limiting my ability to make money. That's my mindset. I don't want to have self-imposed limitations with spreads, which keep me from being able to make money. If something's going up, I want to be able to write it up. Something's going down, I want to be able to write it down. So that's why we just buy calls and puts, and it works really well on ETFs. And the reason it works so well on ETFs, we don't have all the implied volatility issues that stocks have. And that was a big deal trading ETF. They don't have the same type of implied volatility crush, where you buy an option and a couple of days later, all the premium just gets sucked out of it. We don't have that same effect with the ETFs as we do with stocks. So we can just buy calls and puts and have a profit objective, and it just works really well. And we'll go through some examples of that in a little bit. All right. And I said, any questions at all, unmute, ask the question, or type it in the chat window, and I'll see it there and I'll respond to it. Or you can also call me or email me later on, and we can chat one-on-one with any questions you have specifically. So I'm pretty available. So what are we going over today? What I'm calling the Super Trend Sector ETF buy. And it is not, okay, here's the approach basically. We markets, and I'll be switching to the live charts in a little bit. I'm not putting all the details in on the presentation. The details, set up trigger, trade management, those type of details we'll go into live coaching, one-on-one coaching, and then our detailed trading plan that we send out to trading clients. I'm going to show you the details of the setup, trigger, and general trade management. But the detailed details will be going to coaching clients. But you'll learn enough today to understand the concept. And if you want to work on this stuff on your own, you can. But the details, the settings, that type of stuff, that goes to coaching clients. All right. So what we have in the handout, two examples. I'll go through this real quick, and then we'll come back to the handouts. The two examples, one from the S&P and one from the NASDAQ, and we'll go on the charts in a little bit, and we'll go through all of this more specifically. And then after that, what we have is our win-loss stats over the last 6 point something years or so on the S&P, Dow, and NASDAQ. What you see right here is not the new strategy. This is the old strategy. This is what we've been trading long and short, okay? This is not the new strategies. This is the win-loss record for the everything we've been trading for the three major indices, Dow, NASDAQ, and S&P, using the DIA, QQQ, and SPY to capitalize on those markets. And these are the win-loss stats for 2019 through 2026 summarized. It's only 91% winning trades. A win means from the place we enter from our official entry of the trade, it makes a 1 ATR move to our profit target, average true range. That's the measure of volatility of how much the ETF itself is moving over a period of time. So based upon the volatility of the ETF, not the volatility of the option, the volatility of the ETF, we have a profit target. That's how much it's moving on average. So we set up a profit target based upon how much that particular ETF is actually moving over so many days. Everything on a daily chart, no day trading. This is not day trading. If your goal is to sit in front of a computer all day long and watch things go up and down, this is not for you. If your goal is to be able to generate additional cash flow without having to sit in front of a computer all day long to do it, this is for you. If you want to have a life, if you have a job you have to go to, that type of thing, and you don't have time to sit in front of a computer all day long trading, this is for you. This is the evolution of trading. Everyone starts out day trading, but eventually, like any other job, you want to be able to work less and make more. And that's what our approach is. This is our end game. This is not how we start, this is how we finish. We've arrived basically. This is our end game. We work less, we get paid more. And that was our evolution. So you can see the stats all summarized. This is all each year, the number of trades, this S&P trades each year, how many trades, how many wins, how many losses. Okay. And I'm only focusing on the Dow, NASDAQ, and S&P. We have all these ETFs we trade, but the absolute best results comes if you trade the NASDAQ, the Dow, and the S&P. And for those of you who don't have a big enough account to trade those, we also have XLI, which is 90 something percent correlated with the Dow. And we have XLK, which is 90 something percent correlated with the NASDAQ. And recently they both had a nice stock split. So everything is one half as much, cost as one half as much. So it's very tradable. The pricing is really good after that stock split. So those two are great choices to trade if you don't have a big enough account to trade it's the NASDAQ and the S&P full size or Dow full size. Those are nice choices as alternatives. Okay, so good stats. This is DIA and QQQ summary. Once again, each year is laid out. It's in the handouts. You can actually go through this on your own to see what the numbers are like. But this is overall stats. Bottom line, as long as you're taking, this is what I tell people to do, all my coaching clients. If you can place 7 to 10 trades a month, you will make money. Here's what to not do. Place 1 or 2 trades and then look at it. I'm gonna watch these trades for a couple of months, see how they work out before I place another one. You're guaranteed to lose money. You got to be constantly placing trades, and cash flowing because you don't know which ones will be the loss, which ones will be the big winners. just this past week when the market dropped, gap down at the open. I think it might have been on Monday. That was my biggest trading day of in the last year because I got a 50% return at the first target on everything I was trading with that gap down. It was a beautiful day of trading on that gap down open. So you never know which will be the big winners, which will be small winners, which will be small losses, which will be full losses. So you just place trades and we maintain this high percentage and it just works for us. All right, going down a little bit more in the handout. Like I said, we'll come back and take a look at stuff in more detail. XLI and XLK for the people with slightly smaller accounts who can't afford to buy S&P contracts or DIA contracts. You can trade XLI, XLK in place of the NASDAQ, and it works also quite well. Very high win-loss percentage overall. Okay. And then for the new strategy we're going to be going over, it is in the handout on page 9. This shows us all the trades since at least since 2019. And by the way, although we show since 2019, our data for these go back to the year 2000. For the S&P, Dow, NASDAQ, our data goes all the way back to the year 2000. And our win-loss stats also go all the way back to the year 2000. And it's not much different than what you see here, which is just from 2019. So we have a lot of data to back up anything we do. And this is, like I said, anything you see in a rectangular box is done by Becky, my co-host, and also trading partner. So I will not put anything into a spreadsheet. I am not a spreadsheeter. Anything I do will be like this, where I have all my trades. These are all my trades for futures and stuff. They're all on a sheet of paper and written down with all my entry, target, stop loss, and how many contracts. I don't spreadsheet. Everyone documents things however they feel that they want to document things. I do not type it. I'm not going to spend hours typing stuff in a spreadsheet. Some people really like doing that and tracking the data, and Becky enjoys doing that. I don't. So we complement each other really well. That's why it's good to have someone else to work with. So they can help you out by doing maybe some of the stuff, take some of the load off you, verifying your work, what you think is valid, so on and so forth. So for all my coaching clients, I send out what we find valid every afternoon for futures, and in the evening, send out what we find valid for options, and then they can compare it to what we found valid. It's not always the same. Sometimes you did everything right, but your chart has some bad data, which you will never know about unless you are working with someone else and they say, hey, our data didn't match. And then you try to look at it, do a data update, and then it's all good again. But then you match. But sometimes you just don't know your data doesn't match or is incorrect. And there's always bad data on charts. So we just don't realize it until you get a loss and you wonder, like, what happened? I did everything right. I still have a loss. And so that's why it's good to have a group of people to work with. And whether it's in a meetup or whether it's in our private groups online, it's good to have other people to work with. But these are all the new strategy we're looking at. So this is a long only strategy. We might have a short one. I'll show another month or two, but it's a long only strategy. And these would all be additional trades to what I showed in the previous summary. These are individual trades for the Dow, Nasdaq, S&P, XLI, and XLK that were valid over the last several years. So you can see what the win-loss looks like, and this would be additional cash flow um, in addition to the other trades. So this is what this new strategy is going to be adding, and this is what we'll be looking at. The technical setup for it, but this is why we like to trade options like this and very technical. It's just cash flow, cash flow, cash flow. And it adds up. And we don't deal with anything under 84% wins historically. And the higher the percentage, even better, because we don't know how much we're going to make on an option trade. That's why it can vary from a few percent to 20, 30, 40, 50%. And it just sort of adds up, adds up, adds up. And a big part of adding up is that we make money by not having many losses. Not having losses is a huge way just to make money, because every time you have a loss, you need so many trades to offset a loss. Okay. And for you people who really like numbers, the way this works out is that we end up making between $3 and $5 for every $1 lost if you are very consistent with your trading. We're not risking one to make three. We're making three for every one we lose. Okay, it's a different type of trading. We don't risk one to make three, which I've never seen that many people do successfully over time. We are because they try to implement that all weird ways and doesn't work out. We are making three for every one we lose. So if you're consistent over months and months of just booking profits, booking profits, booking profits, and you do your win-loss analysis, you will find yourself making $3 to $5 for every $1 you lose. Okay. And that includes there'll always be a couple of trades where when a target's hit is worth a little bit less than what you paid for it because of time decay, you disregard those. The same way no one complains about the trades where we make more than we were expecting to because of a gap or something. Um, Everything balances out. Every once in a while, you'll have some where you make less because of time decay, but you're going to have so many more where you make more. And it just, the ones where you make less from time because of time decay means nothing. You just place the trade, place the trade, place the trade, put in your profit objective, and also show you ways that you can turn a 10 to 20 something percent return into a 40, 50 to 70 something percent return. That I've shown in some of the previous meetups. I'm not sure if I have time today to do that, but I'll do that one-on-one with people. Those are some of the best trades. But because a simple trade where you're expecting a 10, 20 something percent return at the first target can easily be a 40, 50, 60, 70% return at the first target. So that happens all the time, but I have to show you that specifically. All right, so we're going to be coming back to this. I'm going to switch over to the charts now. I'm going to take a look at the current markets and then we'll come back to the handout. Like I said, any questions along the way, unmute, ask any questions whatsoever, and or type it in chat window and I will get to it. And in the chat window, you will see the link to the handout. So feel free to go to the link and if you don't already have it. And I'm going to change the share now. Okay, share. And let's change. Okay. This is something we usually start out the meetups doing, at least option meetups, taking a look at the big picture of the market. This is a monthly chart of the S&P. Okay, monthly chart of the S&P. This right here is the year 1999. Each candle is 1 month. This is a monthly chart. When you put up a monthly chart, a big picture, things become really clear really fast, as opposed to day-to-day noise. We don't care about day-to-day noise so much. So when we understand the big picture, you really come to appreciate how to trade it, and not to be afraid of when you hear all the stuff on the news going on. All right, so the blue line, this is a 40 period moving average. There's a 40 period moving average on almost every chart we use, almost every one. Learned this from Oliver Velez a long time ago. He had a 40 period moving average, and we just sort of started using it, and it became like a staple on all of our charts as an indicator of trend, a line in the sand, so on and so forth. But you'll see a 40 period moving average on a lot of our charts. This one is an 8 period moving average. Started using this, learned it from John Carter, Hubert Centers, way back when, and because price tends to ride along the 8. When I say ride along, it just retraces back to the 8, retraces back to the 8. Okay, so this was the 2001 market crash when tech fell apart. Okay, when we get two consecutive closes below this 40 period monthly moving average, we're expecting the market to probably go lower, and it did. Okay. When it goes lower and it goes below this 8, every retrace back up to the 8 is a shorting opportunity. Every retrace back up to the 8 is a shorting opportunity. And if you use like Fibonacci or something, every time it retraces back up, you put like a retrace back down 30 something, 50 something percent, and you can actually capitalize nicely off every retrace back up, and those profits add up quickly with some really big targets on a monthly chart. I mean, it works really well. Once again, it's buying calls and puts. For people who just want to place occasional trades, this is the type of thing you can do with looking at a big picture. Every retrace back up to the 8 is a shorting opportunity. Every retrace back up to the 8, it went down, came back up, short. It went down, came back up, short. Went down, closed above. Now we're above the 8. Pull back, go long. Every pullback, not at the 8, but anywhere in this area. This is a monthly chart, so nothing is exact. Anywhere around the 8, pull back, buy, pull back, buy, pull back, buy. And it just rides the 8, rides the 8, rides the 8. These are all, every time it pulls back to the 8, buying opportunity, pulls back to the 8, buying opportunity. So for the longer term investors, these are medium term investments, or they can be short-term option trades where you're getting a fairly good-sized target for the retrace. You don't get greedy. If this is the retrace, you look for a 30 to 50% retrace from this level to this level. If this is here, you look at it retraces, you look for a 30 something to 50% retrace. If it goes more, great. Pull back, you look for 30 something to 50% retrace from high to low. And it works really well, but it's something you have to so Ed's asking how long in your average holding time my trades. Our trades are all on daily charts, some on weekly. I'm showing this for the people who want to take fewer trades on a bigger time frame and for bigger profits. But usually anywhere from 1 to 3 months is the holding period for the life of the option. The target could be hit within hours, it could be hit within days, it could be hit within weeks, but the life of the option is usually 1 to 3 months, and that's in the trading plan, showing you the probability of success for different amounts of time. So we put that in a trading plan also. All right, here's the market crash of 2008. Two consecutive closes below the 40, and the market drops, 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 drops. And then dropped all over 2009 is when things turned around off the bottom. And one thing I do when I work with people one-on-one with the daily strategies, we go through this. If no matter what strategy you're trading, whether you are going to be trading mine, whether you are trading mine, plan to work with me on coaching, you need to go through this period from 2007 through 2009, verify every trade that's become valid, and see if you would have actually made money or if your account would have been destroyed. So I usually have people identify every single valid trade that took place in this area, in this mid 2007 through mid 2009, every single valid trade, and determine would we have made any money, and it comes out to about 93% winning to 95% winning trades. If whatever strategy you trade does not make money when the markets are going lower, then there's something wrong with how you're trading. You can't just make money by hoping the market goes up. You got to be able to make money going up or down. So everything we do works up and down. That's why you see our high win-loss percentage, because we trade up and we trade down just as easily. You actually make more money on the bearish moves because the targets get bigger with volatility, right? So, and we back above the 8 in mid 2009. Every pullback to the 8 is a trading opportunity, buying opportunity. Pull back to the 8, buy. Pull back, and every pullback is, we didn't have two consecutive closes for a while, so we just ride this 8, ride this 8. Every pullback, buying opportunity, buying opportunity, buying opportunity, buying opportunity, buying opportunity. Every couple of years, the market will pull back to its uptrending 40 period moving average every couple of years. For the long-term investors, every pullback to the uptrending 40 is an investing opportunity. You don't go for exactly the 40. It's anywhere in this area. If you're a long-term investor, is where you want to establish your positions. If you're doing options, then you need to have a big enough objective realistically and time. But if you're just buying shares, if you're a long-term investor, then this is your buying opportunity, any pullback. So you look for those opportunities. These are more intermediate pullbacks. Okay. Um, we use Profit Source to do the analysis, or the Thinkorswim platform. We have another analysis platform we use, which is called Profit Source. We've been using it for 20 something years, profit source. It works really well for us. We run certain scans with that. But generally speaking, NinjaTrader is free and the Thinkorswim platform is free. And these are monthly charts. Thinkorswim only goes back 20 years of data. Um, NinjaTrader is free. It goes back decades, right? Here we are in 2018, pullback, buying opportunity. Here we are. This is COVID pullback. It just buying opportunity. This was a major investing opportunity. This pullback literally only lasted 3 weeks, and then it just market just took off. We've been in this uptrend since 2009, basically, or 2010, with periodic pullbacks every couple of years. Every couple of years, you're going to hear on the news, the sky is falling, everything is crumbling, and everything is going all. No, that's why you want to have the big picture and just be waiting. Oh, the news is like, okay, it's awful. Everyone is just, the world is collapsing, the sky is falling. Great. I'm just waiting, waiting, waiting. Uh, we had one meetup last year where I told people, don't don't get anxious yet. The market's going to drop another 10%, and then we're going to have all our buy signals are going to come in. Yeah, or they'll tell you in the news, well, we're officially in a bear market now because the market has dropped 10%. We're officially in a bear market. The people on the news and those reports, that's the only thing they can say is a standard script they read because someone gives them. They don't know what they're talking about. They just read script that someone wrote for them. And so they'll say 10%, okay, bear market now. So the market went from this high is 339 and this low is 218. Did it drop 10%? Oh yeah, it dropped what, 30 something percent? About 30, close to 30%. Normal pullbacks. This lasted 3 weeks. The big bad bear market lasted 3 weeks. Because when the market goes up, they stop talking about the bear market the very next day. Okay. Once again, back above the 8. So don't get caught up in what the stuff on TV unless you're a day trader trading news. Okay. 2022, markets pull back. When this was pulling back, once again, I'm telling people, let's wait for the pullback, wait for the pullback. And then here we're going to have all of our daily charts when our daily chart buy signals line up with the monthly and the big picture buys, when our daily chart buys line up with the monthly buys at the 8, much bigger trade. So goes up, and then we get all of our buy signals on the lower time for this is a monthly. So on a daily time frame, when we get buy signals, and we see our buy signals are literally lined up right along with the monthly levels, those you just get in. Those are the big winners, but you don't hesitate. Get your trades on because when the daily lines up with the big picture monthly, and this was last year, this is when I was telling people it's like the market had come down to like right here. And I told people the market's going to drop 10 more percent. Then we'll look for the buy signals. And it just dropped, drop, 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 drop. Then we saw all of our buy signals come in and boom, right it back up. And we're way up here now. This is as of Friday. We I was hoping some of that new tariff talk would have initiated a pullback, a deeper pullback, but nope. It lasted like 2 or 3 days for the new tariff talk. So that didn't do anything. So we just in this big bull mode, but eventually something, it might even be this coming week when the next Fed announcement comes out for the Fed rate, but something is going to trigger a pullback, is going to pull back to the 8, and then people will freak out. Then eventually, think about this, is going to go from 650 about 660 down to 550. Was that about 20 something percent? Is that maybe 20 something percent? I don't know. This will happen, and it's going to be another one of these big moves will happen. Something's going to trigger this move back down to the 40, and people will freak out, and you'll see the news, oh, the sky's falling, everyone's to blame, this, that, everyone, everything. But this is normal pullback, so whatever, but it's not a big deal. It means opportunity. When you see this pullback happening down here, you just start salivating and waiting, waiting, waiting for your buy signals, and then get in. Okay. So, but this is opportunity waiting. It's going to happen sometime this year, but but we're not anywhere close to it yet. But it can happen in days. It could happen quickly. Well, markets pull back quickly. They take a while. They might take months to go up, but it takes weeks to go down. Okay, so look for that coming up in future weeks so you can track that. This is a monthly chart of S&P. This is an 8-period moving average. This is a 40-period moving average. This one, make sure it's a 40. Yep, 40-period moving average. All right, so let's switch back to now the daily chart. I'm going to change the share. Again, any questions, feel free to ask. And we're going to take a look at the strategy we're looking at today. This is one of the new strategies. This is the one that's in the handout that's documented. All right, so you'll see the chart, red candles and green candles. It doesn't matter if it's an up day or a down day. You are screen sharing, okay. It doesn't matter if it's an up day or down day. Make sure you can see the screen, okay? Let me know if you can't. The filled in candles are down days, the open candles are up days, okay? About, okay, about 16% pullback. Okay, cool. All right, so what we're looking for this trade setup, this is something, is a combination of concepts learned from a couple of different people. The base concept actually learned from Kathy Lean, Forex trader, and that is using volatility bands and extreme moves, a couple of standard deviations lower, and then looking for a buying opportunity. And then the second concept was a concept learned from Jake Bernstein, where you have a candle completely above a certain level, not overlapping, not the wick touching, but completely above another level with some kind of confirmation of a bullish move about to happen in that direction. Okay, so the combination of two different concepts and strategies. Myself and Becky have learned from dozens and dozens of people. So nothing we do is based on is one thing. We've done everything from GAN, every which way you can think of with GAN analysis, GAN price and time analysis, GAN fans, Andrews pitchforks, Gartley patterns, which we've never had a loss on. Gartley patterns are great. If you don't know what a Gartley is, look it up. Gartley, Gartley pattern. If you can trade those are beautiful. Um, but we don't do those anymore because it's hard to train other people how to do them. But we know how to do it, and we have software to identify it. But it's hard. That's why we stopped doing it because the coaching clients will not be able to identify it very easily. It's more subjective sometimes. Okay, so we're looking for an extreme move lower. And volatility band basically touching, these are double volatility bands. And we're looking, this is a Donchian line. The yellow line is from a Donchian indicator. So what we're looking for, and the exact settings we share with coaching clients, if you want to try to figure it out, you can. It might take you a while. And the indicator, the super trend indicator, is what colors these candles to give them a directional bias. All right, so you have to know the setting to use for different things. We have one setting we use for um, currency futures. We have a different setting we use for index futures, that type of thing. So not everything works with everything exact same setting, but things don't move the exact same way. So this one we're using, the same one I showed a couple of weeks ago, the same setting we use on the futures. This is on the currency futures, is the same setting we're going to be using for the ETFs, sector ETFs and options. We touch the lower volatility bands, and then we're looking for a candle completely above this yellow line, which is the Donchian line. We're looking for a candle, first candle completely above this line after making an extreme move lower, multiple standard deviations lower, and then the first candle completely above. And that's the combination of the two concepts I spoke about, learning from Kathy Lean and from Jake Bernstein, that those two concepts combined. This is our buy signal to go long the Dow, DIA. Okay. Once we get this trade signal, we go to our stats, and it's going to be in the upper 80 something, 90 something percent wins. That's on a trading plan. So on the handouts you saw also. And we look at the volatility of the ETF itself. If you take a look at the data box on the side here, the ATR, that represents the volatility. And it says 6.56. So 6.56 points is how much it's moving on average every 5 days. We're not doing complex analysis on options. We're using options to capitalize on the opportunity. This is not the complex option analysis. Pete, there are a lot when we first came out here and we started learning options here in the Bay Area, there are a lot of incredibly educated people who all have science and math degrees and engineering degrees, and they really, 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 really like to do a lot of complicated things. And and I was one of those people. What can I say? I'm one of those people. And I was doing all this complex stuff. But as time went on, it's like I don't need complex stuff to trade. And as I started coaching people, there's no way I can coach people on all that complex stuff. A lot of the people I coach are not engineers, scientists, that type of thing. A lot of people I coach have just regular, everyday people who might be bus drivers, security guards, not people trained in tech with engineering degrees and science degrees, all highly skilled at math. And I didn't want, I look back at some of the old notes I have, I'm like, wow, I can't believe I actually did all this stuff because it's so complex. It's like college level textbooks when I go back and look at it. I wanted something simpler for myself. Becky likes the simpler things also, although she was good at all the other things. And the people I work with like the simpler things too, because it's now we make it look simple with a lot of work and time that went into developing this, but the end goal, the end game is simplicity. So you're seeing the end game, not all the work and time that went into developing. We're talking thousands and thousands and thousands of hours. If I say I'll spend over 25,000 hours on this, I'd be conservative. Okay. We just, to get to this point, thousands and thousands of hours. So to get our first profit objective, our entry is for the trade is the open price the next day or lower. So I need someone with a calculator. Olga's always there with the calculator. So Olga or Becky or someone else. What is 6.56 added to this open of 474.82? So the open price is 474.82 and add to that $6.56. So the open price is 474.82 and add to that the ATR is 6.56. What is that value? Someone get that number for me. Open price the next day, 474.82. And after 474.82, 6.56. So someone type that in while I answer this question. So you're using leaps? Absolutely no leaps. This is these trades take, if you buy leaps, then you're just spending a whole lot of money and getting no return on it because you're paying so much upfront that you're just going to have no profit, um, because you're paying too much upfront. You might get a 1% return, 2% return. Some of these targets get hit within hours, days, or weeks. So we usually 1 to 3 months worth of time, depending, and the stats will show you how big a target, win-loss percentage, and we don't care about time decay. Straight calls and puts scare me due to decay, so must be paying more premium to offset it. Absolutely not. If you're scared of time decay, you have don't. Here's what I tell people: don't look at it. That sounds easy for me to say. Don't look at it. Place trades. The ones time decay will happen on every single trade you place. But the ones that hit the target, you will make more money than you will lose on the ones than you will lose on time decay. Like I was saying earlier, you're going to end up making $3 to $5 for every $1 you lose trading the way we trade as long as you're consistent. Play 7 to 10 trades a month. You can trade almost anything you want, 7 to 10 trades a month, and you make money. You make good money. That's where you get the making $3 to $5 for every one lost. Place trades. but you have to not look at it. If you look at it, it's going to freak you out because premium goes up and down each day. Don't look at it. Well, it sounds easy to say, but that's literally what I do. I like place the trade, don't look at it. I have my exit order in place, so when the target is hit, boom, good. I just check, see what it's sold for, make sure it looks reasonable, and I'm good to go. Sometimes if it looks unreasonable, I go look deeper. It's like, did I get a really bad fill here? Do I need to call a broker? Sometimes you get really bad fills. You got to call the broker. But that is, let's see what we have here. Did anyone give us a target in the chat window?
What was the two numbers?
Okay, the open price is 474.82. So 474.82 and add to that 6.56.
481.38.
481.38.
Yes.
Okay, I'm typing that in as a target, 481.38. So that's our profit target. When was it reached? The next day, the high is 477. This day, the high is 480. This day, the high is 481.23. And this day, the high is 481.93. So here's the day the target was hit. Okay. We will provide win-loss stats based upon 1 month of option time, based upon 2 months of option time, approximately 2 months. I call it expiration cycles, but 1 month or 2 months worth of time. The more time you have, the higher probability that you will have a winning trade, but you pay more upfront for it. The less time you have, it might still be over 84% winning trades, but it will probably be a lower win-loss percentage than with the 2 months of time. But you pay less upfront, so you have a bigger percentage return. So you make a business decision which you want to do. Any stats you see us release in the spreadsheet, that's based on having 2 months of time. If you choose 1 month of time, you will have the win-loss percentage and you accept the business, you make the business decision to go with less time, pay less upfront, and look for a good winning trade. So you make decisions, an informed decision based on the stats, and we provide the stats and we maintain that. And that's more details are in the trading plan that we send out to people every 3 months. We update all the stats and trading plan. So this trade would have lasted. Now, the entry price is the open the next day or lower. It's open 474.82. If you didn't, but let's say you didn't, it opened and shot up. You didn't really have much of a chance to get in the trade this day. It opened and went up. Do not chase the trade. Just chill and relax. Chill. If you miss it, you miss it. But the next day it came back down. It actually went lower. So now, um, here you on this day, your target would have been $6.56, and right here. But now on the next, let's say you missed the trade this day, you get into it this day, but now you can get into a couple points lower. This day it opened at 474.34 and it went as low as 472 something. Let's say you got in a point lower this day. So instead of getting in at the open the previous day, 474.82, you got in at 473.80 something. Now your target isn't 656 anymore. Now your target is 756 because you're getting it is the same point here, but you're getting in lower. That extra point lower can translate to 10% more profit. Okay. Getting in a couple more, your 20 something, 30% return can now go to 30 something, 40 something percent return just by getting a little bit lower. And some of these pullbacks can be deeper. But that extra point makes a big difference in far as percentage return. Okay, this was a quick one. If you missed it, just wait till the next day. Don't chase it. Oh, getting in a better price, even better. Okay, and most of these trades are going to be in the 10 to 20 something percent return at the first target. Most of them. When you get a gap, that 10 to 20 something becomes 30 to 40 something, even or 50 something percent with gaps up or down. So as long as you're really consistent with your trading and keep booking profits, That's why we made an 80 something percent. If you get 4 to 7 winning trades, will offset any one loss type of thing. If you want more returns, then you have to trail stops. You sell part of your position in the first target and then trail stops the remaining contracts, or you just get all in, all out. A lot of people start out all in, all out, then they try trailing stops and see if it fits into your personality and your time commitment each day. Do you have time to be trailing stops? Do you have other things to do in life? Do you want all the hassle of tracking? You might have 10, 15 trades going on, like to track each position, which contract goes with which trade, what do you, so it takes a little more effort to trail stops and that type of thing, right? So example right there. Another one right here. It touches the lower volatility bands, first candle completely above. And we do use this squeeze indicator as another confirmation, which we're not going through right now, but this is another trade right here. Target hits in a couple of days. And with gaps, these are the perfect times for trailing stops because it never pulls back to stop you out. So you hit your first target in a couple of days later, and then you put a trailing stop on remaining contracts, and it gaps and gaps again. You just move the stop up on your remaining contracts. So you might get a 20 to 40% return on the first part of your trade up to the first target. Then you might get a double 100% return, double your money on any remaining contracts. And that happens pretty quickly. You can double your money on the remaining contracts. That comes out to an overall 60 to 70 something percent return on the trade. You make 20 something percent on the first target for the first part of the position, and then you double your money on the remaining contracts, and it averages out to maybe 70 something percent overall return. And that adds up really, really, really fast. Also part of the making $3 to $5 for every one lost. And that's why for anyone I'm coaching, I ask you to commit to at least 6 months of following the plan, placing the trades, place the trades, place the trades. You trust me with the risk management and just forget time decay. You literally have to block it out and trust that the numbers work themselves out. But the only way to see that is to place the trades and trust the process. I know like many people, we all have the experience. We buy an option and it just decays, and but that's why we have to understand the big picture and not just a trade. We do not focus on a trade. We focus on the big picture, understand the big picture. Once again, this is our end game. That's why I like Becky to put all this, ask Becky to put all this stuff in the spreadsheet so people can see the big picture. Place trades, place trades, place trades. Um, and this setup happens all the time. This one with a red candle, so it wasn't valid, and also the squeeze wasn't confirming. It's still a good trade, but we'll catch this move with one of the other strategies we have. We trade 8 strategies total. So although we don't get it with this particular strategy, because it's the first candle completely above, we will get it with one of our other strategies for long. And all in between it, we have short strategies, we have short trades, short trades. So we trade this long and short, not just one direction. So we have multiple, this would be the setup isn't showing here. You're not seeing it here, but this would be a short trade right here. We have short trades up here. We have multiple short trades going on in addition to long trades. So we trade this up and down between our 8 strategies. Here, here we are right here. Reach the bottom, first candle completely above. Here's our good trade. It went down. So this would be one of those great examples of being able to book huge profits. Here, your target would be 18 points. You have an 18-point target. Open price here is 407.48, but then it dropped. It dropped all the way down to 378, 88. So you could have had, let's say you got in a couple days later. So your first target would be based upon ATR of this kind, 18 points plus 20. Now you could have a 38-point target because you got in a couple days later. It dropped almost 30 points. So you can get in with, so now you can have if you get in down here someplace, you can actually have because everyone will have different lives and different realities. Not everyone is going to be able to place a trade the next day. They might be busy, they might be traveling, have family issues going on, whatever it might be. But they get to their trades like a couple days later and say, hey, we had a trade valid a couple days ago. It hasn't moved yet. The trigger entry was triggered, but then it pulled back. So I'm going to get in down here. This same trade which is going to be 18 points from the open. It's going to be up here someplace, 18 points above this level, but I'm getting in 20 points lower. So now it's 20 plus 18. So now my first target is 38 points. This is the same trade. Getting in down here is the exact same trade as getting in up here. The difference is if this trade is going to be a loss, it might be a loss regardless. Okay. However, if it's going to be a win with a 90% probability of success, now instead of having a 10 to 20 something percent return, getting in 20 points lower than expected, now we're looking at a 70, 80, 90% return at the first target. Okay, that's the difference. This is how we make the bigger money. You will not be in every trade at the open. So when I'm looking at trades, I might take let's say I have Dow, Nasdaq, and S&P. I might commit to getting in partial positions right at the open, get in remaining contracts if it pulls back. Otherwise, I know I'm in it. Or if I see Dow, Nasdaq, and S&P all valid, I might get in Dow, Nasdaq right at the open. But then I wait for the Dow for one of them to pull back if it pulls back, and then get in lower. And that last one is when I can make some really good, bigger profits. So there are different ways to capitalize on the pullbacks and just get big returns. So one trade down here is the equivalent of 3 to 4 trades getting into the open. Better use of capital, much bigger returns. You no longer need the 4 to 7 wins to offset one loss. Now it's like one win offsetting one loss. So once again, part of the $3 to $5 made for every $1 loss just by getting in a couple of those, because these type of things happen all the time. And when I'm working with people, we look for those opportunities. And they're always there. They're always there. There's always markets that don't move right away, pull back a couple of points, and then boom. Last year was just a great year for option trading. But this is, here we go. It touched the Bollinger Bands and then gapped up, and here's our trade. You had 2 days to get into it, or one day. Here's the signal, and anytime during this day you had to get in, you missed that day, you missed the trade. But if you got in that day, it gapped, it gapped, it gapped, it gapped. Every gap, first target is hit, then trail the stops, trail the stops, trail the stops. And so if you're trailing stops remaining contracts, these are the type of trades that really just take off and make a lot of money because they're moving in one direction. All right. Any questions on this so far? But this is just an example of one of our strategies. So we create a group of 8. So we're going to have some trades where strategies where we get in at the bottom, some where we get in once the market is trending higher, once we get in certain trades when the market is established bullish. We have short trades where we get in at the very top, and we have short trades when we get in once it starts actual established trend going lower. So we use 3 chart templates, this one plus 2 others. Most of you have seen those. If you go to our YouTube channel, you can see any of the past videos on option trading, and you'll see a little bit of those charts, at least a part of it. But this is what we do. We trade ETFs up and down, and it just with options. But is it that simple? Yeah. Our entries, that's our entry. We see it touch the bottom. Is that just like this? On this day, great, it touched the bottom. Did it, do we see a candle completely above the yellow line? No. Next day, is there a candle completely above the yellow line? No. Is there a candle completely above the yellow line? No. Hey, the next day there's a candle completely above the yellow line and it's green. If it was red, we got nothing. But it's green. That's our buy signal. Once we see that, we know that based upon all trades valid since the year 2000, that we now have about a 90% probability that this will make a 1 ATR move in the next 1 to 2 months. This coloring of the super trend is an indicator that gives us a directional bias, whether it's red or green or any color you want to make it. That combined with the technical analysis of coming off an extreme low point and this up move completely above this line. Once again, the concept learned from Kathy Lean and from Jake Bernstein, combined concepts, worked really well. That's why we learned from so many people all around the country. We would literally fly around the country to learn from people in person. I'm glad we did that back then. A lot of those people don't share the same details they used to share back then. Now they just try to sell you a trade signals as opposed to teaching you the detailed analysis. So, but we learned it from the people back then, and glad we did because now we can implement it because we know how, why, and everything things work. All right, so the next day you get in at the market open, you get into trade as quickly as you can. If you miss the open, you have another day. Yep, you missed the trade getting in that day. The next day you could have still gotten in. You don't chase the market. If you weren't able to get into at the open price or lower, you either miss the trade or you wait, see if it pulls back. The next day it pulled back, you get into trade when it comes down. And boom, gap, targets hit within a couple of days. That's how we trade. And it works really, really well. If you have remaining contracts, you either go all in, all out, or you take part of your position off and trail stops on the rest. It's that simple, and it really is that simple. I'm going to show you our big list of trades just so you see what I just showed you the S&P Dow, Nasdaq, but it's a bigger listing. I'm going to change the share, and then we'll kind of start wrapping up in a little bit. Okay, where's my spreadsheet? Trading. Okay, I'll just switch that for a second. Okay, share. Yeah, here it is. Okay, so here is our big list of trades. So this is what I showed you earlier with the summary, but here's a list of actual trades, long and short. And you'll see the last year is also on our website. You can go feel free to download that. Shows you the last year. We really, really good year of trading. We don't get a lot of losses. So as long as we keep booking profits, the key is keep booking profits. This is everything. This is all the Dow, Nasdaq, and S&P. Just keep booking profits. So these are all the individual trades. And we're not showing that today, but we also have the other spreadsheet that shows all the other ETFs also. And like I said, that's on our website. Feel good to go to my behind the scenes website. The link is on the hand is in a chat window, and you'll get the listing of all trades for 2025. And I think there are trades that go back beyond that also. And that's long and short for all the ETFs, not just the three big indices. But yeah, we don't get a lot of losses as long as you're consistent with your trades. You just place trades, and you will not be in every single trade. It's impossible to be in every trade. But let's say you caught 70, 80% of them. Cha-ching, cha-ching, cha-ching. Sometimes the option pricing will be too expensive, and that I go over with one-on-one with clients. You can't just go buy a call or put and blindly throw on the blinders. No, sometimes they're too expensive. But if that's the scenario we just went over where you get in at a better price on a pullback, then our target is now bigger relative to the price of the option, so it makes sense. Like when we had the 38-point target instead of the 18-point target, well, with the bigger target, the option price becomes irrelevant because our target is so big. Feel free we can just go ahead and buy the option outright. But yeah, this is the individual trades for each one, and the Dow, Nasdaq, and S&P give us the overall best results, period, hands down. We did presentations all last year showing groupings for people who want to trade the metals, energy sector, pharmaceuticals, international markets. We have ETFs for Hong Kong, Germany, Australia. They're all great, but nothing is better than trading the indices as far as win to loss. Also, what you'll find is that when we're looking for like 2 months worth of time, some other ETFs may not have an option available 2 months from now. It might have to go out 3 to 4 months. They're not all the same. So, but the major indices have something every month. There's always a month to trade. So there's always something available to trade in the appropriate month. So that's a big difference also. I'm going to switch back to, so over here, we have all the super trend trades also. These are all the super trend trades. It's in the handout also, but it's summarized here. But literally, we only had a couple losses in 22. on the same day, and the rest since is just a trade, a loss every once in a, since 22, we've had what, one loss. That's basically it. That's the new strategy. This is a new strategy. And that is why we like this strategy. Like I said, it's not new, so to speak, but it's adapted from things we did on Forex specifically. So we adapted some of the Forex strategies, which are some of the best, most profitable things to implement with our futures and with our options. Okay, I'm going to switch back over to the handout. Okay, so that's the same thing we did here. Are there any questions on any of the stuff we just went over? Specific questions? Because I know some people try to implement this on their own. That's okay. Call me, email me for any questions. I can help you with that. Set it up if you need. We use NinjaTrader, which is free. For our ETF options, we use either NinjaTrader or Thinkorswim to set up trades. So I can give you the charts for NinjaTrader, and I usually do that for all the coaching clients. And also the charts for Thinkorswim we give to the coaching clients, all set up, everything ready to go. Trying to do it on your own, it'll be close, but it won't match. Also, it's good to have other people to work with when working on this stuff. It's even if you're a veteran, experienced trader, it's good to have someone to work with because what we look for is consistency and accountability. Anyone who wants to work with me, let me know before this coming Friday. I only take on 1 to 2 coaching clients a month since everything I do is one-on-one. I don't do group trainings at all, ever, ever, ever. I think I tried it once for like a month and it was like, nope, didn't work. One-on-one only. So what we found is that people, I might, what's clear and simple to one person may not be clear and simple to another person. So I may have to say the same thing 3 different ways to one person for them to get it. Because everyone's different how they process information. I was literally our simplest strategy. Some people get it like that, and some people just don't get it at all. And I have to find, and I was like, this is the simplest strategy. But it's simple to me, but to other people, they process that information differently. So that's what I adapt to. However you think and process information is how I have to adapt to you. Some people I've met with literally once, never heard from them ever again. I'm like, I heard from them years later. I'm like, I never heard from you after the first time we met. And they're like, no, it's all good. I've been trading. It's been working really well. Cool. I'm like, okay. And I know Becky knows this. There's one guy he came to one of my presentations in Sunnyvale. One year I showed one strategy. It was one of these option strategies. I saw him 1 year later, and he said it's literally the only thing he'd ever learned how to trade. So he's been trading on one strategy for a whole year, and it's working extremely well. I'm like, great. And I showed the whole strategy, and that's all he knew. He knew nothing else. But as long as you commit to the strategy in detail and be consistent with it, it works. Consistency is so, so important. So, so important. If you don't, so someone's asking, okay, so if you don't have a large account, what do you think about using micro futures to swing trade? Well, we swing trade futures and options. Have you looked at our futures meetup? If you haven't, go to the chat window, go to the YouTube channel, take a look at the meetup we did last week or 2 weeks ago. But yeah, we do this with micro futures for the indices, and we do it for the currencies. The currencies are the money makers. I'll be showing in a couple of weeks in February how we trade the Dow, Nasdaq, S&P, and Russell using um, futures and the new super trend approach. The new super trend will be used on multiple charts and multiple entities. But yeah, futures it works extremely well. Do you trade FX? We used to trade FX but we stopped. We only we don't there's no security trading FX. They can steal your money and run away, which happened to people in brokerages trading FX. If you go look back, you'll see one brokerage, literally the guy who owned the place took the money and ran. And it took years to track them down, and they recovered maybe 10 cents on the dollar for people. People had their whole trading accounts on there, all their funds on there. It was all gone. The guy stole it. So there's no security with FX. That's why we trade currency futures, including micro futures, because there's more protections with US protecting it. So the US based account. So it works really, really, really well. So we take on clients who have a little experience, no experience, or a lot of experience. It doesn't really matter. We trade it, we teach the same strategies. It's a matter of how we pace it. Sometimes we might have to go slower and hold your hands, or sometimes we might get into it. There's one person I met with on a Friday morning, and we were placing trades by 9 a.m. that morning. And so that was an experienced person. We just got right into it. So everyone's different, but if you're new, perfect. We'll get you from scratch and get you with good habits. If you are a novice, we'll fine tune it. And if you're experienced, this will might be all new, the approach and the strategy. So you get all excited because there's something new to work with. And you see once you see the trading happen over a couple of months, you just gotta I want you to commit to 3 to 6 months to see the numbers work out. So go through the longs, the shorts, the good times, the bad times, and then you see that all the numbers work out in your favor. Futures, you'll see the cash flow right away. You'll see the results right away. Options, you'll see cash flow each month, positive cash flow each month. Futures, you'll see an account build. Options, you'll see cash flow, and over time, you'll see the account build over time. So, but yet just with consistency. So what I charge is 1750 for the options program, and a lot of trading opportunities, all different size accounts. It works really well. Um, so, but everything is one-on-one, and try to scroll down here. It's stuck. Okay, here it is. Okay. And we set all this up for you on between, if you want to use thinkorswim, great. If you want to do it on NinjaTrader, which I prefer because it's easier to use for the analysis, and you place your trades wherever you have your brokerage account, is where you place your trades, but the analysis is done on NinjaTrader or on thinkorswim. And in an ideal world, we review your trades every month to make sure you're not making any big mistakes. That's key. Review your trades, review your trades, review your trades. Don't make mistakes. And if we see your trade execute and the results seem strange, then we need to take a closer look because brokerages do have bad executions, and sometimes you might literally need to call the broker, have a chat with them, and they can get you back money. I've had trades execute or didn't execute at all. They just did not execute. I thought I hit my target, thought I had profit, looked at it, and it didn't execute. I'm like, and then it went the other way. I'm like, what? I called a broker. They looked at my trade, looked at my order, and they said it should have executed, and I should have made this much money. A week later, they called me back and said, we took care of you. We went to the exchange. We got you the money you should have made. Okay. Because the trade should have executed. And for whatever reason, it did not. So you got to have a good relationship with your broker. It's the same handful of people you call and talk to all the time. It's not like a big room with hundreds of people on a phone. No, it's literally a small group of people that handle all the calls. And so you call a couple of times, you might end up with the same person each time. But they get to know you and be nice to them, be professional with them, tell them something went wrong, and they can really help you if you really got a bad execution. They will assume it's your fault naturally at first, but once they look at it and see that, okay, it should have been bet, they'll fix it. And I'm talking about Schwab is the one who I do business with, so I can only speak for Schwab, not other brokerages. All right, and if you want to do both future under futures is a similar situation, 1745 for futures, and if you haven't seen that meetup video, watch it on our YouTube channel. It's all one-on-one, and if you want to do the combined program, that's the price, but with a discount. But let me know if you're going to do in the combined program. I'll take 750 off. Give yourself a couple of months to get everything implemented. If you want to do either the options or futures, it's 250 off the prices below. So this would be 1500, not 1750. And like I said, I work one-on-one with you as long as it takes. If it takes us 3 months to get you to a point where you're consistent, it takes you 6 months. I don't drop you after 6 months. The thing says 6 months, but I don't drop you after 6 months. People I met with in the last week or two who started with me years ago. We still meet. They want to meet people I've met with who started with me 10 years ago coaching. They want to meet. I mean, I don't charge them extra for that. It's like I just look for if they want, if they do well, I'll do well because they'll talk about me and refer services. People help me along the way, and I help people along the way. Um, so I try to make sure, do whatever I got to do to make sure you're getting good trades and following the plan. Follow the plan, do what I tell you to do, and good things happen. You go off on your own, you get afraid. Sometimes, if I don't hear from people for like weeks or months, it's usually because they're messing up and they don't want to tell me. Okay, so always tell me, even if you mess up, let's fix it. You mess up, let's fix it, and let's just fess up to it, and then we can take care of that and move on. So. We're going to be doing our next meetup after the Super Bowl. So the next 2 weeks, nothing. We got our first big Fed announcement next week or this coming week on Wednesday. Market's going to move. Usually the first Fed announcement is when markets take off. It could be up or down, but markets usually move a lot after the first Fed announcement of the year. Um, if you go to YouTube channel, you just, like I said, watch the videos on there, how the different on different topics. But if you're interested in working with me, you got a feel for what we do and how we do it. Is it that simple? Yes, it actually is. It's all technical. It's all very visual. You got to be able to see colors change or two lines crossing, and and for the options, it's really that simple to find the opportunity. And then the rest is choosing the option. I help you with that. It's going to be the first in the money option. It's going to be in the money option. It's 1, 2, or maybe 3 months out of time, and our plan shows you if you do 1 month out, then here is the win-loss percentage. It might be 85%. If you do 2 months out, it might be 92%. But if you do 92%, it's going to cost more upfront because you're paying for more premium time. But if you do 85%, then it'll be cheaper, but you have a 7% more chance of taking a loss. So there you make a business decision. Everyone's different. Everyone has a different personality. 10 different people placing a same trade will get in 10 different prices at 10 different days at 10 different strikes, like the example I showed with the big pullback. So it all depends on the schedule you want to trade on and your own personal habits. So a lot of people do it and very next day get it over with. Some people wait. Some people like me, it's like, hey, I got a pullback. Let me take a look at what we're not trading yet and see if we can get into this trade. So everything's different. Everyone's different. We'll get different results, but same trades, and just matter of consistency. Just check, make sure that all questions answered. Trade FX, I don't mean currency futures. Yeah, we used to trade FX, but not anymore. Just keep it to currency futures now. Do you ever take on clients that have no trading experience? Yeah, absolutely. A lot of the people I coach have zero experience. And that's actually what I actually like to work with people who have zero experience because we get to like instill all the good habits right away. This is not an experiment. This is the end game. This is the final. We show you how this is what we do every day, every week, every month. We're not trick. This is if you're doing this, it means I'm doing it. It means Becky's doing it. So we're not doing anything different. All coaching clients are doing it, and just follow the plan, be consistent. So yes, definitely call me this afternoon, Bill, who asked that question. Call me this afternoon or email me and let's chat, and then we can find out what your particular situation is. I'll be in the rest of the afternoon, and I'll be also here tomorrow morning and mid-afternoon and later in the evening. I'm usually available. I have a lot of flexibility. Benefit of trading and not having a full-time job. Left my full-time job engineering in 2009 because trading would supplement my income enough so I didn't have to like have a full-time job anymore because there's so many things I wanted to do. I'm a city official in Santa Clara. I work on films and commercials, doing acting and stunts. I train in parkour and Brazilian Jiu-Jitsu. I need time for that. I'm a fitness instructor. I teach kickboxing classes, taught two classes this morning in the UFC gym in Sunnyvale, California. So I do a lot of different things. So I don't have time for a full-time job anymore. And having the trading has been the one consistency with income over the years. It creates income for me that lets me do other things that don't create income for me. Okay. So trading is awesome for that reason. It gives me constant income and I can do other things and not have to rely on having a full-time job. All right. So, but like I said, my coaching is all one-on-one. And if you want to work with me, give me a call or email me. And I'll be around the rest of the evening, the rest of the afternoon.
I
And
have
I'll answer questions. Okay.
I
It,
have a I have a question.
Olga.
This is Olga. Um, as far as the currencies,
Yep.
it made a big move yesterday.
Yep.
Um, should we be looking for a pullback?
I don't remember. We don't look for pullback. We look for valid trade setups.
Yeah,
So were
it
you
they
in the Aussie
reached.
dollar?
No, no.
Yeah, those were the two I sent out.
I actually did all the work for the euro and the British pound because it looked like the same setup, and I didn't take the trade, so I missed the whole thing.
Yeah. I remember whenever we see Aussie or Euro
Yep.
valid, take the trade. I can't stress that anymore. Aussie and Euro are our absolute two best deals.
Yeah, but sometimes I don't see it because it comes out a little bit later, and I miss it until I see it in the morning, and it involves a little bit of working. So there might be a delay.
Okay.
Um, so yeah, I will, but I will, you know,
Check your email on
you
afternoon.
always take it that night, right?
Yeah, check your email on afternoons. I usually email out the futures trades usually before 4 o'clock on afternoons, 9 out of 10 times.
Okay,
The ETF one comes out later in the evening.
okay.
For those of you wondering what she's
Just
talking
making
about here,
excuses.
I'll show you real quick what she was just talking about. I'm going to change the share, go back to the chart and share, and I'm going to pull up us Aussie dollar. Uh,
I've taken a few that I took like that evening, and that it didn't work out so well because sometimes it will gap and hit my trade, get me in the trade, and then I was in the trade for a while.
yeah,
Um,
you got to get those futures in the afternoon because they just take off.
yeah, that's what's going to either take off or they do something crazy, and then you have to wait a while, for it to come back. But anyway, I got it.
Yeah, this was a trade right here on Australian dollar futures, and that just took off.
I know
Um,
if you look at all the currencies, they all took off yesterday.
yeah, so
The British pound actually, when I was watching both, the British pound actually took off first, and then the euro took off, and then I looked at all the others.
yep,
But I hadn't been following the Australian dollar, but
but yeah, this just took off. Um, and it was when so we had a couple of trades on the that
on
were
the
valid. One was valid back here,
uh-huh.
and it went sideways for a couple of days, and it took off, hit a target, and the other one was valid right over here, and then it took off and hit a target. So we had two trades in play. One hit one day and one hit the next day. So it was really good trade. So we just for the futures people, we just place the trades in on afternoons and walk away.
hmm
Same time. So
and take a look at the euro. That made a lot of ground just in one day.
yep.
hmm
And if this had been an update, this would have been a valid trade for this strategy. This was an update right here, the first candle completely above. Look, we went over 2 weeks ago. That happened. We went over the short trades 2 weeks ago, but for the long trades, we look at next month. But the long trade, if this was an update, this would have been a valid trade long. But we'll look at that next month for the long strategy on the currencies.
Well, the currencies, uh, much more volatile,
I'm not
do
sure if
you
the right
find?
word is volatile. They're much more predictable.
Predictable.
They're much more predictable. I wouldn't say volatile.
Okay.
I'd say they are predictable. Um, I'm going to change the share again here. That's why we like the trading the currencies because they're more predictable and they work really well for us. But yeah, Aussie and Euro are the two money makers when we follow the plan. And if you trail stops on those, it's good opportunities. There's Aaron saying he took the Euro trade, was very happy he caught it. Aaron's one of my coaching clients. So, but yeah, these trades, these moves happen quickly sometimes, and that's why we want to get them placed in the afternoon because most of the moves happen overnight when the world wakes up. So in the middle of the night is when Australian markets are trading, Asian markets are trading, European markets are trading. US markets are the very last ones to trade. So most trades happen and entry gets triggered overnight and then they move overnight. So that's why we want to take the futures trades in the afternoon or early evening because overnight is when they actually start to move. And as Becky likes it, says she likes to when she wakes up, she likes to see money in her account. She wants to make money while she's sleeping, is the way she puts it. All right, so
Thanks.
if you have any more questions, we're gonna bring this meeting to an end for now, and we'll resume probably the weekend after the Super Bowl, so in another 3 weeks or so, and we'll do some of the new future strategies on indices, and also we'll might do another one on options in about 5 weeks. So we'll do our next one on options in about 5 weeks, and the futures in about 3 weeks after the Super Bowl. So mid-February.
Thank you for the link. It helped a great deal. Thanks.
Cool, thanks. All right, so contact me about the coaching, and we go through, or call me, and I go through really details with you specifically to your situation. If you're a newbie, perfect, perfect, perfect. We get all set up and get you going. All right, I'll talk to you all soon then.